morning, traders. It's Monday, April 14th. And as we head into Easter weekend, markets are anything but quiet. From oil to gold to ags, traders are bracing for more volatility driven by escalating tariffs and sharp shifts in demand and supply. Brent crude is hovering around $63 a barrel. OPEC is raising output, and China's March crude imports are up 4.8% year on year. That's mostly down to record volumes of Iranian crude heading into Shandong. But broader demand sentiment remains soft. The US-China trade war is heating up, with tariff hikes reaching 145% on Chinese goods and 125% on US exports. If you're trading in crude, consider shorting Brent on any rallies. Expect price pressure from softer global demand and monitor US stockpiles and OPEC compliance for signals. Gold is still drawing strength from global uncertainty. Prices are just below record highs, and Goldman Sachs now sees gold hitting $3,700 an ounce by the end of the year. Safe haven buying remains strong, with central banks and ETFs driving inflows. If you're trading in gold, it's smart to hold your long positions, keep an eye on real interest rates and any dovish commentary from central banks. That's going to drive the next move. China's soybean imports dropped 36.8% last month, largely due to a delayed Brazilian harvest and trade disruptions. Meanwhile, Olam is refocusing on its food ingredients business, signaling a structural shift in the agri-trade landscape. If you're trading in soybeans, think about reduced Chinese demand and keep a close watch on Brazil's logistics and weather updates. Also consider spread strategies across related ags like corn and meal. Over in metals, China's copper imports fell by 1.4%. Stronger US prices are diverting global flows, and overall demand has been hit by uncertainty across major economies. If you're trading in copper, tread carefully. Demand for China is softening, but any infrastructure stimulus or policy support from Beijing could trigger sharp reversals. Look, geopolitically, things are tense. Aside from the China-US tariff escalation, the EU is planning retaliatory tariffs on American goods, potentially. These trade barriers are starting to fragment commodity flows, which means spread and arbitrage opportunities will become more important than outright directional bets. If you're trading across markets, diversify and stay nimble. Hedging against tariff-induced volatility should be a priority, and use news-based triggers to time entries and exits more tightly. Now more than ever, traders need visibility and control. That's where Enuit's ENTRADE platform makes a difference. One solution across all commodities with real-time risk and P&L built in. Visit us and follow us for more weekly insights. Thank you and have a good week.